So PayPal just reported their Q4 earnings, and if you look at the stock's reaction before we actually looked at the numbers, you might say, oh, it is crazy because it went up 8%, then it went down 5%, and now I believe it's down 3 to 2% or so at the time of making this video. Of course, things will fluctuate throughout the earnings call and then throughout the next trading day. But overall, a double beat. We're going to go over the numbers right now. Some of the numbers have came in surprisingly well, such as transaction margins. A bit more about that in a bit. But overall, PayPal finishes 2023 with solid fourth quarter, enters execution year in 2024. Q4 2023 revenue increased 9% to $8 billion, GAAP EPS of $1.29, and non-GAAP EPS of $1.48. As for the full year 2023, revenue increased 8% to $29.8 billion, GAAP EPS of $3.84, and non-GAAP EPS of $5.10. Quick comment here from the new CEO and President Alex Chriss. I'm pleased with our better than expected fourth quarter results, which are a testament to the incredible work our PayPal team and their strong commitment to delivering more value to our customers each day. We're driving significant transformation across our company and are committed to making the necessary changes to our business to drive profitable growth in the years ahead. Again, the most important point that he's been making since he came in, to drive profitable growth ahead. Not growth at all cost or no growth at all, but growth in a profitable way. We've added key talent to our leadership team, accelerated our innovation velocity and impact, and taken action to realize cost savings that we're reinvesting in our most important initiatives. 2024 is a year focused on execution to position PayPal for long-term success. As predicted, especially as predicted in the latest PayPal video, where I basically put out my expectations for this quarter, Q4 I expected to come in pretty good, Q1 to be solid, and then full year, that's where all the attention comes in. They give us a bit of a guidance already right now, but I do believe they're going to give us way more in the earnings call, which I'm going to do a separate video about later. Will come out probably tomorrow or the day after that, because after this video, I'm going on Future Investing channel, live stream there. So come join us after you finish watching this video. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so, by the way, this is a new type of press release that they just gave us, so bear with me. We've got here a summary of GAAP and non-GAAP results. We're only going to look at the GAAP ones. So net revenue increased 9%, transaction margin dollars basically flat year over year. Operating income, that's up 39% year over year. Operating margin up 468 basis points year over year. Effective tax rate is up 4.8 percentage points. With regards to net income, increased 52% year over year. Earnings per diluted share up 61% year over year. And net cash provided by operating activities up 64% year over year to $2.61 billion. Also, if we look at non-GAAP, we knew that free cash flow for this quarter would have been much more than the last one. So that increased 72% year over year. Now, as for full year 2023 to full year 2022, net revenue increased just 8%. Overall, 2023, again, was not the greatest year for PayPal. If you look at net cash provided by operating activities, that's down 17%. I do expect this to continue to accelerate in 2024 in a positive way. As you can see, net income is up 76% year over year, operating income up 31% year over year, and operating margin up close to 300 basis points. Again, this is going to be like with Meta, although you can't really compare the businesses, but the sentiment here, 2024 for PayPal is the year of execution. Then, if you go to page number 11 of the press release, we get, in my opinion, one of the most important metrics here: active accounts, number of payment transactions per active accounts, TPV, and then transaction expense rate and transaction margin. So I'll start with the most obvious one. Active accounts down another 2 million for the quarter. Was expected. I said that in my previous video. I fully expect that number to come down yet again. Number of payment transactions, that is actually up. Current quarter versus the prior one, that's up 8% and 13% year over year. So again, you're focusing here on quality, not quantity. As for payment transactions per active accounts, that increased another 4% quarter over quarter and 14% year over year. These are important metrics. I know a lot of people will focus on, oh, but they're losing accounts, etc., etc. Yes, might be. But again, focus on quality. You want your quality accounts to transact more and more valuable. You make more money that way. As for TPV, that increased 6% quarter over quarter and 15% year over year. Of course, Q4 holiday season was to be expected. Then, as the CFO predicted, transaction expense rate was a bit higher than before, 0.97%. And then transaction margins is actually up quarter over quarter. I was very surprised by that. I thought it would be again lower for the last time, but maybe last quarter was the bottom at 45.4%. Now at 45.8%. Let's see if that was the bottom. If we can make our way back up, that would be excellent news. Then, with regards to guidance for Q1, so they expect non-GAAP EPS mid-single digit growth. Q1 2023 non-GAAP EPS was $1.17. With regards to revenue growth, approximately 6.5% spot and 7% on an FX neutral basis. Then, for the full year 2024, right now, they expect non-GAAP EPS to be in line with prior year, which was $5.10. Free cash flow approximately $5 billion and share repurchase of at least $5 billion. So, okay, let's see if they can certainly increase free cash flow. If that's the case, then yes, $5 billion, at least $5 billion in share repurchases could be very, very nice, especially if the stock doesn't move much. Now, going back to the transaction margin, they explain here a little bit why it improved a little bit. So transaction margin dollar improved 3.5 percentage points sequentially, driven by minimum headwind from purchase contractual compensation versus Q3 2023, Braintree and PayPal branded checkout. So overall, this is the picture for Q4 and for the full year of 2023 for PayPal. Of course, with the new CEO, with new talent, new management, it's still early days, but I'm already seeing some positive signs right now. The stock will do what the stock will do. Of course, during the earnings call, that will be where the most important points will be mentioned. That will be a separate video. And so right now, if we look at the stock, for those that are interested, we're actually down. I believe we were up 8%, we're down 6%. It's going to fluctuate, I believe, during the earnings call and then tomorrow during the day as well, which means now we're at $61.57, which means we are between the 20 and the 50-day moving average. Let's see if we can stay there. I mean, if positive things get mentioned during the call and the stock doesn't move much, I might be inclined to add a little bit more. But overall, look out for the moving averages here. We did hold up quite well with regards to the 51 when we hit it the last time back at the end of January. So keep an eye out on that if you're trying to get a better entry point. Oh, and one last thing, almost forgot, Brad Gersner from Altimeter Capital, they have a small stake in PayPal. The reason here is they are encouraged by recent strong comments from Alex Chris, and then you can continue to read the whole script here, pause the screen. But the most important point, well, one of the most important points here, he says, we are not activists. There are enormous opportunities with iconic founders, CEOs, and boards who truly want to partner and win championships. And we will choose them rather than waste our time trying to do things others lack the energy and commitment to do themselves. He says that basically because one thing we will not do is stick around and try to change the board of management if they lack commitment. 2024 is a very, very important year for the new CEO and for PayPal as a whole. If they want more institutional investors to invest in that company, they obviously need to show that, well, we're going to execute, there are going to be cost cuts, we're going to continue to grow, we're going to grow in a profitable way, and so we can attract institutional investors, plus, of course, retail as well. Good comments here by Brad. Overall, good quarter as expected. Now, let's wait and see what they mentioned during the earnings call. Of course, do share your thoughts down in the comments below if you enjoy this type of videos. Leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye-bye.